Hello, welcome to LCG's preview for the week ahead. Kelly's away this week, so I'll be on my lonesome discussing the upcoming central bank interest rate decisions from a lot of acronyms, the ECB, the RBA, BOC and BOJ. Friday's non-farm payrolls amid fresh signs that new Fed Chair Powell has helped the dollar bottom out. And we'll also touch on a tough time for UK retailers, with two of the big firms going into administration in the last week. Before I get to all that though, I'll run through some highlights from the corporate and economic calendar. We have earnings from Trinity Mirror on Monday, Ashtead, Just Eat, Eastman Kodak and Target on Tuesday, Rolls-Royce, Restaurant Group, Legal & General and Costco on Wednesday, Aviva, Domino's Pizza, Dell Technologies and Sears on Thursday, and finally Inmarsat and Regal Entertainment on Friday. Moving on to the economic calendar, there are services PMIs from China, Europe and the UK and the US on Monday, the RBA rate decision and US factory orders on Tuesday, Eurozone GDP, the US trade balance and US ADP unemployment on Wednesday, Chinese trade data and the ECB rate decision on Thursday, and Chinese inflation, the Bank of Japan rate decision, UK industrial production, and of course, good old non-farm payrolls on Friday. So at first, worth talking about those central banks. Now, of course, we can go through each one of these meetings individually, but the nature of particularly the FX market at the moment and the way that markets have been reacting globally to expectations of inflation, particularly in the US, it's all become a bit US-centric. So it's almost worth collecting these central banks all together and just seeing relatively as a group almost, how hawkish or dovish are they relative to the path from the Fed. And as I mentioned, and this really ties in a lot with what's happening here, is that Jay Powell, the new chairman of the Fed, gave his testimony to Congress last week, and it was a little bit more hawkish than people expected. It was a hawkish surprise, and so the dollar has been trying to base out for a while. It's been trying to put in at the bottom, a double top in the euro dollar, a similar kind of triple top almost pattern in the pound. The dollar yen has been a little bit softer. It's broken to the downside, but for the most part, that's rebounding a little bit too over the last week. So the Fed has become more hawkish. Will these other central banks ratchet up their expectations for when they unwind the QE in the case of the ECB, or will they up the talk of rate rises in the case of the RBA and the BOC? And of course, the BOJ hasn't really made any indications yet that it's looking to reel back on its policy. So we're looking for all those clues to see whether, in fact, the dollar has bottomed for the time being. If they all turn out a bit more hawkish than expected, then actually maybe the dollar can roll over. If they all pretty much continue on the same kind of path of conversation as they have been over the past few meetings, that probably may be enough to put the bottom in the dollar. So then the other thing to discuss related to all this is non-farm payrolls. So as you may well remember, especially if you had any positions open in the market, that it was the wage data from the last non-farm payrolls release in February, which was obviously January's data. Now we're in March, we're looking at February's data. It was those earnings data that came in a little bit ahead of expectations, pushed up inflation expectations generally, sent bond yields higher, and sent equities rolling over. And it was that was the main catalyst for why we saw that big drop, that 10% correction in equities. So we're a month later now, so it remains to be seen whether that can be a catalyst again. It's obviously a little bit more expected this time, so I wouldn't expect it. But nonetheless, it probably will rattle a few market participants if we do see another jump in wage data again. And there's no real reason to think that we shouldn't. Seasonally, no particular reason. And the US economy, some measures showing it slowing a bit. I think that's more against heightened expectations. Generally, the economy is still ticking along nicely, and we could see wages pop again, and we'll have to see how markets deal with it. And then lastly, just want to talk about some of the UK retailers, specifically Toys R Us and Maplin, both big electronics, but also obviously toys. just that kind of old model which hasn't really embraced online. And this is probably something we're going to see more of. And I think both these companies are going to struggle in administration to find new buyers because their business model could have been okay had they adapted 5 years ago to the changing marketplace. But competition from the likes of Amazon, generally online buying, and a bit of a retrenchment generally on the high street amid this higher inflation, particularly in the UK. And we're probably going to see more of these UKers struggle over the next few days. Right, thank you very much for watching and good luck with trading this week. And if you do want to watch these videos as soon as they're released, please follow LCG on YouTube and Facebook.